the last transaction on 31 December where we sold 4,000 ordinary shares for cash at the fair value of R1.80 each. You can go and have a look at. We have done a sales transaction. Remember, you need to do a fair value adjustment before you recognize the disposal. And remember to have a look whether the amount that you receive maybe includes brokerage. It was not the case in this example, but remember to look out for it. What I would like to focus on is on the year end. What happens at year end? Well, on the reporting date, 31 December, we need to get the fair value of both our investments, of the shares and of the rights from the JSE Limited, and we need to make sure that we do a fair value adjustment on reporting date so that our investment in shares and our investment in rights at reporting date is measured and presented on the SFP at their fair value. So because there was a sales transaction on 31 December, you will already have done a fair value adjustment before recognizing the disposal, and your investment in shares will therefore be at the correct fair value, which is the 31 December fair value, because you did the sales transaction on reporting date. If we have a look at the rights, your rights only expire in the next reporting period. That means on 31 December, our reporting date, we do still have the rights, and we have to do a fair value adjustment on our rights account. The calculation of the fair value adjustment on the rights is done in Calc 7. How do you do that? You take the fair value of the rights that you have left in your rights to account after buying and selling and exercising. How many rights do you have on reporting date? You compare that to the carrying amount of those rights. What is the balance in the investment in rights T account? That balance has to move either upwards or downwards to the fair value. That is a fair value adjustment. Where do you take the fair value adjustment? Well, we are in the category at fair value through profit or loss, which means that that fair value adjustment goes as an expense or income through profit and loss. In this case, our balance was lower. Our value per right increased. So it's an upwards movement. It is an income fair value adjustment. If we have a look at the rights T account, on 31 December, we would do a fair value adjustment that we just calculated, and the balance will therefore be at the fair value. This will be the balance brought forward on 1 January of the new reporting period. Now, if nothing happens between 1 January and 22 January when these rights expire, I apologize, the rights expire on 15 January, not 22 January. When these rights expire, if you have done nothing since the beginning of the year till then, so you didn't buy more, you didn't sell some of these that you have, you didn't exercise any rights, you would get to the 15th of January and you would have rights left. You would have 750 rights in this account. If you get to 15 January and these rights are still there, they are worth nothing anymore. Once expiry date has been reached, if you still have some of those rights that have now expired, they are worth nothing. You cannot sell them anymore. You cannot exercise them anymore, which means on the 15th of January, you would need to de-recognize all those rights. You would need to take them out of this T account. You no longer have this financial asset. The investment in rights needs to be naught. They are worth nothing anymore because they have expired. Now, if you didn't use them, either sold them or exercised them, what happens? You lose them. You have lost this value. So what do you need to do? You need to have a write down. So the entire value that is left on the dates that the rights expire will need to be written down. It is an expense and it goes through profit or loss.